Thank you everyone for joining us for our CrossCountry Mortgage Fireside chat. We still have a few people trickling in, but I am going to give it over to Sean, Chris, and Don to get us started today.
Thanks, Carrie. All right, good afternoon, everybody. Thanks for joining us. I think many of you have probably been on these calls before, but just to start with, this is completely just unmute yourself and speak up, or feel free to drop a note in the chat box. And I'll be I usually say it's a three-way chat, but I end up doing 90% of the talking, and every now and then let Don and Chris get a word in edgewise. But Chris, Don, feel free to chime in anytime. But today's fireside chat is focused more towards kind of getting into the spring market, first-time homebuyer specials. So before doing that, as I usually kick off, just want to kind of just talk through interest rates, and I'm going to do a quick share screen here. Make sure we got it going. All right, you guys looking at my giant face?
Nope. There we go.
Oh, there you are.
All right, cool. So this is an easy one. Just know that Don, Chris, myself, every loan officer has a web page where applications can be started online. It boggles my mind how many people, somehow maybe I get someone refers me to them. They find my web page and just blindly put in all their personal information. So just know that that's fine. As a realtor, there are plenty of good resources here, but if you follow any of us on Facebook, we have daily posts going out just with, what's happening in the biz, and you can steal, borrow, copy and paste anything in there. But there's also a blog that you can, kind of feel free to just, take and run and use what you like. So yeah, we'd love it if you gave some credit to us, but not necessary. There's so much public information out there. Go for it. Interest rates. Anybody want to hear about interest rates today? All right, we'll touch, I guess, I'm sure you guys raised your hand without the camera on, but so here is, it's going to be an interesting week. I mean, I think I say that just about every week if someone were to ask, but this is the interest rates going back over the last 12 months. So right now, the 30-year fix, actually, let's get out a few of these. The Mortgage News Daily, this is the site that's, it's best done a survey to lenders. It's not commercial. It's not Freddie Mac's goofy one with and without points. So it's meant to give you kind of the pulse on where rates are. And you'll see that 30-year fix is, for the most part, comfortably under 7%. That's for, an FHA buyer with, an average credit score or better, a conventional buyer with, a good credit score, or even a first-time homebuyer program. So 30-year sitting right here, looks like 6.79. That's the national average. And it's up a little bit from where we were just below. Even crept down, saw some at 6.6, 6.5, and occasionally even a little dip there with some of the special programs that we have out there. But as far as where we're headed from here, we don't know. You don't know. Don is, you might know, but he's not going to tell us. So generally speaking, the winds just constantly keep changing. And last September, it was expected the Federal Reserve Board is going to drop interest rates, or going back actually, let's say last July. Federal Reserve Board is going to drop interest rates twice before the end of 24 and 4 times or more in 25. We saw rates plummet. And then November, election season, and ever since, and it doesn't matter who won, there was going to be some uptick back with interest rates because both candidates are going to be putting money into the economy. And here we are, and you see down, up, down. Are we going back up? We don't know. There's an unemployment number coming out tomorrow, first Friday of the month. Wall Street, mortgage nerds, we're all watching that unemployment report that comes out, and that can drive interest rates up or down. So doesn't mean rates are going to be 0.5% higher or lower by the end of the day tomorrow, but you'll definitely see, a little bit of a direction after that. So anyway, higher for longer has kind of been the, rates probably are not going to be at 5 point something anytime soon. You're just as likely to see 7.25 come back as you are 6.5 or 6.25. But Don and Chris, what do you guys want to add on that?
I agree with you wholeheartedly. Everybody's a little weary about this jobs report tomorrow. And we've seen that volatility the last couple of days in the market because we had about a 7, 8, 9 day run here of positivity in the bond market, and the last 2, 3 is just gone the other way. So the market is feeling skittish and freaked about tomorrow's number for some reason.
Volatility, it feels a little a little up and down. I don't know. Don't watch too much news. That's maybe my recommendation.
Well, and let's talk from the perspective for everyone on the call who, we're in the first week of March, the spring market is upon us. What are the conversations we want to be having or not be having about interest rates? So, everybody on here knows where interest rates were 5 years ago. And that's, 4 years and 51 weeks ago was okay, everyone go work from home until we figure this stuff out. And the world changed. But here, look at interest rates. We've been over 6% as far back as this graph goes here, February of 2003. So we haven't been under 6% in over 2 years. That's what you need people to hear. And where are we at? If you take the high and the low over the past 2 years, we're actually slightly better than that. October, 16 months ago, 7.92, and actually interest rates, if we really analyze this, over 8% for a fleeting moment. So no one's going to be doing cartwheels over the interest rates, but we are lower than probably we should be or where we thought we would be right now. So that's the gift that we have. Anybody have any comments, questions, or thoughts on interest rates that they want to share or inquire about? No?
Ask away or put it in the chat, whatever you feel most comfortable with.
And can you see the upper left hand, DJ? Can you guys see the MBS highway little thing here?
Yeah.
Yeah. Okay. So if this little button here, it says red 5, that's not horrible for interest rates, but that's not good for interest rates. If you see that turn to green, you can basically the higher number that red number gets, the more red Chris and DJ's face will get as we go throughout here, because that means rates are going in the wrong direction. But we are that plugged in, so for what that's worth. Okay, so enough about interest rates. Let's talk about, I'm going to flip-flop back and forth here. So today's focus is going to be on first-time homebuyer programs. This is our team. So there's me in the top middle, DJ lower left, and Chris on the far left. But so three of us are kind of the face of our branch here, but there's plenty behind the scenes just for what that's worth. But get that one out of the way here and get over to this one. Okay, so we're going to talk about FHA. Now, I just got done saying we're going to focus on first-time homebuyer programs and such. FHA is not a first-time homebuyer program. You do not have to be a first-time homebuyer for FHA loans. You can own a home, you can be a repeat buyer, you can have investment property. So, but the reason we're talking about it here is something like 68% of homeowners look at FHA and often go FHA. It might actually be a little lower than that now, but a lot of first-time homebuyers fall into FHA. So I'm just going to talk real general about that. FHA requires just 3.5% down. FHA is extremely flexible when it comes to credit. I mean, they don't have an official credit score, but if you got 640, 620 and higher, you're going to probably be fine with just 3.5% down. That down payment can come from your own funds. It can come from a gift from a relative. It can come from a grant program. We'll talk a little bit about that here today. And if your score is under 620, 580, I closed a loan 2 months ago for somebody with a 563 credit score. They did pay a little bit higher interest rate and closing costs. They did need a larger down payment, but we're able to get that done. So again, you do not have to be a first-time homebuyer for FHA, but you want to, be familiar with it. FHA does have kind of a cloud over it that I think is unfair, and Chris and Don, and for those of you in the business might think the same, but sellers do not like FHA loans. Do you know why? Usually they don't, but they're just told, oh, I don't want an FHA offer. Well, why not? Well, I don't know, because Susie around the corner said her house blew up, or the contract fell apart because of an FHA offer. Well, with FHA, what you have to be aware of is that in all cases, in almost all cases, we have to appraise the house. The FHA appraiser is an FHA inspector. That's not a home inspection. That's not a point of sale. The appraiser is going to be in there for maybe 20 minutes. And what they're looking for is clear and obvious health and safety issues. If they see no handrails going up from the first to second floor, they're going to consider that a safety hazard, and they may require that handrails to be put in. Maybe the garage is, weather beaten on the west side of the building, and the paint is chipped. They may want that scraped and painted. These show up about 1 in every 6 or 1 in every 7 appraisals. So this rarely happens, but it does happen. It doesn't really warrant the, all the red flags going up when there's an FHA offer, but you do want to be aware of that. If you have a house that you're bidding on with an FHA buyer, or if you have a listing with an FHA offer coming in, or you're just wondering if you should list it available to FHA buyers, feel free to give us a call. I mean, we won't be able to certify it ahead of time, but we could certainly give some guidance on that. Chris or Don, anything you guys wanted to add on the appraisal stuff? No? Okay. FHA loan limits. Again, this is not a first-time homebuyer program, but a lot of people think, oh, you can only do an FHA loan up to a certain, $200,000, like a starter home. Here's we're considered a low-cost area, but we can do an FHA loan at $524,000. And believe it or not, it's not just for somebody with low down or shaky credit. Have a customer did a loan somewhere around $500,000. They had a collection show up from a ex-spouse. So we didn't even care. We ignored the collection, but it was still on their credit report. And it did drop their credit score, so much so that they would have had to put 20% down and go conventional. And oh, by the way, would have had an interest rate equivalent today to probably 7.6%. We snuck them into the FHA program, just 3.5%. They put a little bit more than 3.5% down, but they didn't have to. And they got an interest rate right now that would be equivalent to about 6.5%. So there are plenty of reasons to go. Credit is sometimes part of it. The higher debt to income ratio, someone who's carrying 2 mortgages at once, FHA gives us a lot. So just wanted to mention just a bit on the FHA, but before we got into more specific programs. Any questions on that? Nope. Okay. And Chris or Don, I was going to run through like Home Ready, OFA, things like that here next. So what I'm going to touch on next is OFA. And OFA is a great program, but there are some drawbacks to it. So OFA stands for Ohio Housing Finance Agency. This is a state-funded program through bonds. And they have conventional, they have FHA, they have discounted interest rate, they have grant programs, they have stuff for first-time home buyers, repeat buyers, veterans, and heroes. So I could literally spend the next half hour on this. I won't, but I'll kind of run through some of how this works. And these are the interest rates. We don't set the interest rates. No lender does. Not every lender in Ohio could do OFA loans. You have to be registered with them. CrossCountry surely is, and we do a lot of these. But the interest rates come right from them. So just looking through here, if you have a government loan, so this would be an FHA buyer, they could get a 6.125% interest rate because they're a first-time home buyer, which is not a bad deal. This particular option, if they're a police officer, a teacher, a nurse, they can get a 5.875 30-year fix. That is pretty darn cool. There are income limits depending on the county you need to make and how many people are in the house. You may have to make below 116 or 131, 134 a year. So obviously we would go through those limitations with the buyer, but personally you're asking, just reach out and we can give you a bit more details. But it offers a lower interest rate. OFA does have to approve the loan qualifications or the loan eligibility in addition to us. So you always hear us saying we can close in 21 days. For OFA, give yourself a little bit more time because we're not in control of the final clear to close or a portion of that. So give yourself a little time, 30, 40 days. It would be more than enough typically. Now, the closing costs do run a little bit higher because of an admin fee and origination charge. So this does run a little bit higher, but we counsel the buyer and say, hey, here's if you're considering this program, here's what's available to you. They do take a home buyer course. It's done over the phone or online, but it's pretty streamlined. But you can also get a grant. So let's say we have a nurse who wants to get some down payment assistance, either 2.5% of the price, or let's go 5% of the price. So let's say a nurse buying a house for $200,000. We say, okay, well, FHA, you need 3.5%. You need $7,000. This program will give them $10,000. That covers all of the down payment, and there's a little left over for those closing costs that are extra. So it's a great option. Here's the big drawback. That grant is technically a second mortgage that's forgiven after 7 years. So if if the buyer sells the house or vacates, moves out of the property within 7 years, they do have to pay that back. Grant for grads, similar. Grant for grads is for someone who graduated, I believe it's within the 24 months prior to application. So slightly different. I believe the 5-year clawback on that. So if they move out within 5 years, they have to pay it back. And Chris and Don, if I have any of the details incorrect, just let me know. But the buyer is paying a little bit higher premium and interest rates if they're getting that grant. And following the interest rates with OFA is the wackiest thing. Interest rates just went down like 0.3% over the last couple of weeks. Guess what OFA did? They raised their interest rates 0.25%. It's there's no rhyme or reason. I imagine if our rates on the standard, Fannie Freddie conventional FHA tick up, all of a sudden we'll see OFA go down. And it's really weird. It has probably more to do with kind of what they have in their coffers, what they have kind of set aside for the grants, but they work inversely. So when I'm talking to a buyer, say, hey, let's get pre-approved for these programs, conventional FHA, OFA, not OFA, and we'll decide later on. You don't have to decide when you're doing your pre-approval, okay, I'm doing OFA. You can punt on that decision until the offer is being made and the contract is accepted.
Hey, Sean, that buyback isn't it a prorated buyback?
Not anymore.
It's even if you sold in year 7 with a month to go, you'd pay the full amount back.
Yep.
Right.
Yeah, the way it used to be is they would forgive 1/7 of it, but
Yes.
sometime I think it was last year. I'm not sure. They changed that rule, and now you got to pay the whole boat.
And now you can also refinance that rate. And I think if there's enough room, they'll subordinate the second mortgage.
Yep.
They've said they will. Can you guys hear me? Sorry.
Yep.
Okay. They've said that they will do the refinance program. That being said, the other day I was doing a little research for a past client who was considering the refinance, and I noticed there's no third-party lenders that are marked that they can do the refinance program. So I don't know if we do it through the state or how that works.
Yeah, it's weird. You're kind of out on a limb, and I think OFA just hasn't addressed this since there's been little to no demand for refinancing these. But there's going to come a day, because that's the other part of saying, if you sell or move out, you have to pay this back. If the refinance, you can't just go with a regular, boring old loan, standard loan. You have to go back through OFA and are bound by their terms and their interest rate. So that's all kind of TBD. So it's another kind of buyer beware.
Now, the buyback is only if you're using a grant. If you use the HERO program where there is no assistance, or the First Time Homebuyer program, there's nothing to pay back.
Mm-hmm.
Right.
Yep.
Now, 2 things. I always say these are a last ditch. These are an absolute last resort for a borrower. If they have literally no money, but they want to buy a house and are qualified to use this program, because they're expensive also. I mean, I just say $150,000 house, probably a good $1,500 to $2,000 extra fees to use this program. Would you agree, Sean, Chris?
Yeah.
Yep. So you're definitely paying a premium. And I always tell somebody, if you've got the down payment, we could look at this, but let's look at the regular also and kind of
Right.
weigh the short-term and long-term pros and cons. But, the story I always tell, I worked with a buyer who 18 months, first 6 months, we're fixing up her credit. The next 12 months, she was kind of striving to come up with a down payment. And every time she almost got there, the car broke down and she spent all her money on that, or, the kids, something happened with the kids, and all of a sudden there was new expense. This program opened up. She got her score high enough to qualify for it. This program, seller covered some of the closing costs. She got out with next to no money. She got in, I should say, with next to no money out of pocket. So it is a godsend for a lot of customers. But for somebody who has the option of, using their own funds for a down payment or another third party, again, we'll put these side by side.
Yeah, it's funny because of the costs, DJ, you're right. I tell people they offer 2.5%, but it's almost not worth it.
Mhm.
It's either no assistance or the 5% where you can wrap the cost up in the grant. Because the 2.5, I mean, that eats up all your grant money, and
It
it's
does.
like, okay, what was the point? Yeah.
And conventional has a similar, I won't go into detail on that other than the
Again,
obvious.
this is if you borrower. And I've had borrowers where they wanted to buy a house and you use this program. They had no money, but we got them into this program with literally no money out of pocket, by getting seller concessions as well, along with the grant program. So it's utilized for that. I wouldn't utilize it just for the interest rate because it's costly.
Mm-hmm. Down here, the next home, this is for repeat first. Almost said repeat first time home buyers. Yeah, good luck with that. Repeat home buyers. So as long as they sell their current home and don't own a home already, they can qualify for this. So where this might be advantageous is maybe, well, conventional, maybe someone doesn't have perfect credit and they don't qualify for any other programs. These interest rates comparatively might not be as bad, but we're always going to do an apples to apples. Oops. Oh, sorry about that. MTC. DJ, did you want to jump on that one real quick?
Right now, it's not available.
Oh, you're right. Never mind. Well, mortgage tax credit
It's
is
a
something
tax
that
credit. Essentially, you receive a tax credit, I believe, up to $2,000 towards your tax liability when you file your taxes. What that means is, just an average income earner, just say somebody making $50,000 a year, normally going to get a refund of their at tax time. And let's just say an example, their refund's $2,000. They're part of the MTC program. They will probably receive an additional $2,000 on top of that just for being a part of that program. So now the refund goes from $2,000 to $4,000. So that one's really cool, and that's a beneficial program to use.
but it's not
That's for
available.
as long as you own that loan.
Right.
It doesn't go away.
Yeah, it to be clear, it's not available because it's popular. They had so many people applying that they were like, hold on, we gotta figure this out. So
Anybody have any questions on OFA? Okay. Jump over to the next one here. All right, so now I'm going to talk about Home Ready. Actually, I don't have a flyer on this. Oops, yeah, you guys don't need to see all that. Hold on a second. I'll just keep this one up for now. So Home Ready is conventional financing. If somebody just says, hey, I'm buying a house, Fannie Mae or Freddie Mac, conventional, how much is my minimum down? What I say is, if it's a primary residence, 5% is the minimum down. However, if you're a first-time home buyer, you're allowed to go 3% down. And then there's something called Home Ready, Home Possible. And what this is when someone's buying a house, we put their address into what they call the lookup, and it tells us what the HUD medium income might be. Like maybe let me do that real quick here. You guys still see my screen, right?
yep.
Okay. So slowly looking up here. Let's just put in the office address. Okay. So we punch in someone's address for where they're buying. This is for the Home Ready, Home Possible. And we look at what the medium income is. So this says right here, Home Ready income. So if my customer has less than that much in income, this program, we will give them, or excuse me, this will discount their interest rate and discount their PMI. They only need 3% down. So that's the Home Ready, Home Possible. This is a conventional program. It's somewhat flexible on credit. You do not need perfect credit for this. Often you do when you're putting less down, but they make a little bit of concessions there. So that's Fannie Mae, Freddie Mac, Home Ready, can lead to a discounted interest rate based on this income, discounted PMI. Now, one step further from this, further into this, we have something called the Smart Start program. So the Smart Start program is, oops, wrong one. Sorry, got so many different programs, I get them flyers mixed up. So this one, if they are approved for that program and their income is under that medium income, that was it 77,760, we'll give them a grant of 2%. This is not OFA. This is not in addition to, this is completely separate. But this would be a conventional buyer where we're going to give them a 2% grant. So if they buy a $150,000 house, we're giving them $3,000. If they buy a $200,000 house, we're giving them $4,000. So essentially, it's a 1% down loan program. We can sometimes be creative, so to speak. So I had a customer, married couple. I don't remember the exact numbers, but let's say that the wife in this case made $70,000, the husband made $50,000. They made too much money for this program, and we were going to let it go. Then we worked around the numbers and said, you know what? If we take the husband off, we use the wife's income alone, 70,000. She's under this threshold. She still qualified to buy the house on her own. We plugged this right back in. She ended up with $4,000 at closing. Even if we could leave the husband on, but if we just take his income, or here's another one. I have somebody who he's an electrician of some sort. His base salary is 72,000, and he makes about $30,000 in overtime. He bought a house way under his maximum qualifications. We didn't have to list his overtime on the loan, and he got $4,000. So OFA always squeezes as much income out to make sure you're not disqualified. This program, Fannie Mae, Freddie Mac, you're absolutely allowed to kind of, I don't say pick and choose. You can't lie and say you don't make some certain amount of money, but we can kind of selectively ignore second and third parts of the income.
Yeah,
So
if you
this
don't
is
need bonus income, you don't need overtime, we don't have to use it.
nope. And this is available on multifamily too. Isn't that right, Chris?
The VLIP is. I don't know that the Smart Start is.
I believe that it is. So
Okay.
don't quote us on that, but these programs they keep shifting.
I'll look it up right now. I'll have
All
an
right, there we
answer
go.
for you in like 30 seconds.
All right, yeah, no problem. So this is a popular one. It's essentially, hey, can I buy a house with just 1% down? Yep. And the interest rate's going to be discounted and the PMI is discounted. So this is we'll call it a triple bonus. Quadruple bonus if you're the one who brings that to them, because then you're going to look like a hero in their eyes. So any questions on that one? No?
No, Sean, you just made an interesting comment there. You said buy a house with 1% down. There are mortgage companies out there locally advertising that all you need is 1% to buy a house. Of course, the disclaimer is you must qualify for this type of program because there is no 1% down loan. The other 2% would come from the grant.
Perfect. Well said.
It's a 1-unit single family residence only.
All right. Just like I thought, right?
One thing to note on it, I'm not sure if you mentioned this, max down payment is 5%.
Yeah, so this one, if you have somebody putting 20% down, we're not going to give them an extra 4. We're more reserving this for somebody who really, truly sort of needs it or that it really helps out. This program is different. This one, even if you're putting 20% down, we may give you this one too. So this one is called the Community Promise. So this is a really unique program. This is a grant. So we've changed the rules. So if you've heard me tout this program before, we changed the rules earlier in 2025, within the last 60 days or so. So still conventional loan, still 3% down. You can put 5, 10, 20% down, whatever. But the amount that we give you on the grant is based on your income. But it's not based on where you're buying, it's based on where you're living. So if I live in a community, let's just say I'm just gonna use this
Richmond
example.
Heights, there's pockets of Richmond Heights.
Okay.
I just closed one.
All right. So let me do this real quick. Let's go up here. All right, I just closed one in South Euclid here, so let's go here too. Come on. All right. Sorry, everybody. This is my old house in South Euclid. So if I still lived in this house, or let's say somebody's renting this property and they're a first-time home buyer, we say, or they live with mom and dad at this property and their income is under 77,000, we're going to give them $6,000 on their next purchase. Doesn't matter if they're buying in South Euclid, doesn't matter if they're buying in Columbus or Miami, Florida. They will qualify for $6,000 just to be not handed to them, but gifted and granted at the closing table. So I'll tell you just 2 quick stories on this. I had a couple, they were renting in, I think it was Euclid. They bought a condo in Willowick. They were already pre-approved with another buyer. They called me as a second opinion and we just ran through this and I said, hey, good news, you qualify for this program. So long story short, I'm talking to them. They already have a contract in hand and have an offer from a lender, and the seller was paying closing costs or giving a 3% credit towards closing costs. This deal couldn't have been better. My rate was 0.25% better. closing costs, I'd say they were a wash. I don't remember them being any different. And then they got $6,000 at closing on this $120,000 condo purchase. They closed on the house and got their earnest money back at closing. So when it came time of how much do you need to wire at closing, nothing. In fact, Mr. and Mrs. Buyer, we're going to owe you a check. Where should we mail this check back to you after we're closed on this house? That was pretty cool. Another scenario had a couple, they lived on Van Aken, renting a place, bought in Solon, putting 20% down. And I kind of was like, hey, guess what? You got this program. You want an extra $6,000? Like, yeah, sure. I said, well, we could just, modify it towards a down payment, or, we could be more creative with that. What do you have in mind? Well, they paid 2 points to buy down their interest rate to 5.99%. So the extra charge for the points was basically gobbled up with that grant, and they ended up with a 5.99% interest rate. Guess who hasn't called me in the past 2 weeks about refinancing? Those guys, because they would have been sitting probably at 6.75. So I don't remember exactly where it was, but they shaved a big chunk off of there. So we're gonna, the good news, this money is not mine, Don, or Chris's. Nobody will give away money faster than the three of us when it's not ours. So, so this is just, these are the programs that once a buyer calls, we're going to say, okay, can we fit into these? And there's a few other options out there as well. But these are the big ones. So any questions on the promise?
It's Cheryl. Hi.
Sure.
Some banks will say, for example, after 5 years, if someone has been in a home for 5 years, they will allow them to qualify as a new home buyer, first-time home buyer. Is there a time frame where you would qualify as a first-time home buyer?
Yeah, so Fannie Mae, Freddie Mac, FHA doesn't disseminate between first time or not, but the programs do, like the grants and such. How everybody defines a primary residence is if you've owned a home within the past 3 years. So if you sold a house in February of 22, you're now eligible again. So we go back and look at the transfer date. OFA has some other rules because if your spouse owned a home, then you may be disqualified. So if Tom and Susie, if Tom bought a house and Susie was not on the title or on the mortgage, but they're married, her spouse owned, OFA is going to look at that a little bit different. And we are never the ruling party on this, so to speak. It's always, the program provider who's going to make the decision on that. Now, for Community Promise and for the Smart Start, we're the provider. So yeah, I guess inevitably that comes back to us. But Fannie Mae or Freddie Mac is who will make the determination if there's any doubt or any question.
Great.
Sean, another area you need to be careful with as far as being a first-time home buyer. Let's say you're entitled on mom or dad's home. That could disqualify you as being a first-time home buyer, just being entitled, even though you truly are not the owner of the home. So that's another thing we have to look at. And we have programs that every lender has programs that they run to see if somebody has owned a property or currently owns a property. Another thing about this Community Promise program, it's not just local, state of Ohio. I have a customer transferring in from the Philadelphia area. So all I do plug in his address, he comes up, he qualifies for this program.
Yeah, I was actually going to read those off because I've got someone relocating to Bedford from the DC area. Same deal. They qualify for the grant because they're coming from. So if you bear with me, this is the metropolitan areas that qualify. So if they live in these areas, there's a chance they qualify for this regardless of where they're buying. Atlanta, Baltimore. There's some areas of Texas I don't recognize. Brownsville, Texas. Chicago, Cleveland, Dallas, Detroit, Houston, McAllen, Texas, Memphis, Miami, New York, New Jersey, Newark, Oklahoma City, Orlando, Philadelphia, Phoenix, Riverside, California, San Antonio, St. Louis, Tampa, and Washington, D.C. So, yeah, if you can figure out where McAllen, Texas is.
Yeah. And it's funny, with that person who lived in Van Aken, I kind of half jokingly said, hey, I just gave you, I essentially lowered your rate 3/4 by giving you $6,000. Can you, if I give you 20 flyers, will you slip them under all your neighbors' doors? Because every person in that building is now eligible for that because based on where their address is. So
Yeah,
pretty wild. McAllen. Oh, wow.
right on the border.
Oh, okay. Oh, never heard of it. Interesting.
Well, if you know anybody down there, tell them they've got $6,000 to come in their way.
There you go. Oh, Matamoros. There's a Springsteen song about Matamoros. So didn't know where that was either. So you learn more about just first-time homebuyer programs here at the CrossCountry Mortgage Fireside. Is anything you guys wanted to add on those programs specifically?
No,
Okay.
a lot of them is we don't know if somebody qualifies, so we actually have their information in the system. So it's important that we get the people in for the pre-approval.
Oh yeah, and you'd be shocked not only with how many people don't know what their spouse or significant other makes, but how many people don't know what they really make. Oh, my income is 55,000, and I would, sometimes it comes in and it's 42, other times it comes in and it's 73. You'd really be surprised, especially when people get the gross and the net mixed up. Outside of these, there are community-based programs. Each one's, Heights had a program, used to be called the Heights Fund for the Future. Cuyahoga County has one through the Cleveland Housing Network that kind of comes and goes. Euclid has the, I forgot what the acronym is, but the Euclid has a first-time homebuyer program. So different communities have different programs. We work with those. I mean, just about any community program we work with as well. Now, you can't, in most cases, you can't do double up on these. You can't get the community promise on top of the OFA along with the Euclid First Time Homebuyer program. But we will work with all those, and we're more than happy to analyze. I mean, we get paid the same, whether it's a First Time Homebuyer grant program or a $500,000 investment property or a second home down up in Vermilion for 1.2 million. So we just want a happy customer, and like I said, if we could find a good angle for the buyer to walk away in a better financial position, we're all for it.
And those community programs usually come with lower income qualifying guidelines than what you're seeing here.
Yeah, the Euclid, like a lot of those, there's going back to that, this threshold here. Some of these programs I messed that one up, didn't I? Anyway, there was some of them, if you're under this 50%, the city of Lakewood has a program. If you're under 48.6, you get a little bit of an extra boost, a little bit of an extra grant. So those are going to be a bit more income based and really dedicated to somebody who's more in that lower quadrant and really couldn't get in a house otherwise. Some of these community grants, by the way, they're 17% of the price up to $17,000. So buying a house for the idea there is you buy a house for 200, put 3% down, they'll give you an extra 17. Now you're a 20% down buyer. Another program, has anybody heard of Greater Circle Living?
Mm-hmm.
This one you cannot combine with an FHA program, but it is for conventional. So this is specifically in a real defined specific footprint around University Circle. But if you work for one of the eligible nonprofits, Cleveland Clinic, Case, I mean, just those two right there. I mean, Cleveland Clinic's the largest employer in the state. Obviously, Cleveland Clinic, the Art Museum, Case, a handful of others right in that area. They can get a grant for it's $20,000 to even $30,000. So years ago, they bought a condo for $30,000 and got a $30,000 grant. And it was, they ended up calling me 3 years later. They, of course, were moving to another house, selling that one. They had paid off that $30,000 mortgage. So they essentially paid $30,000 for that condo, plus the payments they made for 3 years, and made a nice chunk of change on that property. So anyway, I won't, here's the footprint of where it is. You do have to take a course. There's an extra approval. They do their own, also in addition on-site inspection, but there's a pretty big chunk of area. So for what that's worth. So cool. Any other programs that community-based otherwise that Chris or Don you thought might be worth mentioning?
That's pretty much it on them.
Mm-hmm.
You mentioned the Euclid one, Tim?
Oh, don't forget mom, dad, grandma, grandpa.
Yeah.
Gift money.
Gift money is allowable for a primary residence. So primary residence, there's no limit. So it says, well, how many are we allowed to get? There is no limit. You can get you can buy a house for $100,000 and get an $80,000 gift. You're gonna have a hard time finding someone who will do a $20,000 mortgage, but it absolutely is allowable. And you can get gifts from multiple people. We do have to verify that they are related. There's some gray area, close family friend. There's a burden of proof, so there's a bit more to it. But that if you've got a situation like that, please consult us. So yeah, they changed the webpage since I was last there a few weeks, but EdCore is primary source. And then they used on the actual web page for the city hall, they had more information. So here's the income limits, a little bit higher than actually that 50% that popped up there. I don't know if that's 60% or what, but it gives you a little bit more room. And with the community based, you're applying two different places. You're getting your mortgage through CrossCountry, and then you're applying through EdCore. So you're kind of working with two simultaneous, partners. So we work with, obviously, willingly and happily with anyone out there, provided it's a legitimate source. But we're going to be based on, in this case, EdCore's time frame as well. So if you've got somebody, if their process is a little slow, they often need an inspection. Sometimes they need a lead inspection. So there's a few extra hoops to jump through. So you just want to be aware. And don't just think of this as you and your buyer. If you've got a listing in Euclid, for example, get familiar with this program. Print out a flyer, leave it there at the open house. If you've got a property we'll stick with Euclid for a second, even forgetting about this program, you have a buyer who's moving from Euclid to Euclid, they're going to qualify for that community promise program and potentially get handed $6,000. That shortens up the conversation, on, oh, how much do I need for a down payment? What are closing costs? Oh, by the way, my seller's not paying commission. You're going to have to do it. Oh, cool. We could use this grant. So all of that kind of comes into play. So, all right. Any questions? I mean, that's most of the presentation, is trying to keep that around 45 minutes. So I'll shut up for a second if anybody has any questions or wants to add to that. These flyers, you know what? I apologize. I'll drop these in the chat box and stay open for a little bit in case anybody wants to download these. And of course, Chris, Don, or myself can email these to you as well. But while I'm kind of uploading those, I think I'm uploading. So any thoughts or any questions? It doesn't have to be related to the grants and such. If there's anything you have in mind, just let me know. Oh, you know what? I think I just accidentally gave that to Bob Zimmer only. So let me gotta share it with everybody else. So. Bob, I know you're a Heights guy, so parts of Cleveland Heights and University Heights qualify for the Community Promise one. So if you have somebody you're selling, I guess I can't work with the buyer for who's selling a house, but if you've got somebody who's a tenant or somebody who's about to, move out of a rental in the area, just send me the address. We plug it in, tell you if they're qualified, and you could say, hey, you're thinking about buying a house instead of renting. Here's the flyer for a program that we know you qualify for based on where you live. If income and everything else falls in line, you're good to go. All right, so I'll pop those in. If you want me to email these to you, just shoot me a quick email or drop your email address in the chat box, and I'll send these out to you. As you'll notice, some of these flyers are like 5 and 6 megabytes, so I can't send like more than 1 or 2 at a time, but I'll send these out to anybody that wants them. Cool. All right, I'll stop the share screen here for a second, but oh, cool, 18 people, good turnout. Any questions, any thoughts? No? Chris or Don, any parting shots?
Remember, if you're working, we're working. Call us.
Yep. I met with Cheryl on here just a little while ago, and I said, hey, if it's Saturday morning and you need a quick pre-approval on the gymnastics, there's a good chance if Chris is out for a jog, and as long as it's not leg day, Don's going to be available. So between the three of us, we got you covered.
Right.
Evenings, weekends, nobody tends to buy a house 9 to 5 these days. We realize that. And, these programs and such, obviously we bring these up usually extremely early when we're doing pre-approvals. but feel free to bring these up even with a customer who's already pre-approved. And if you have questions on these programs, on anything, on you're taking you have a listing and a VA offer is coming in, and you want to know what you need to know about VA loans, just reach out to myself, Chris, Don, and we'll give you kind of the what you need to know, sort of brush up on VA or any other option that you have. So cool. All right. With that, I'll go ahead and just get an email out. I think I see 3 addresses in there. I'll start sending these out. Oh no, I see a few more. All right, I'll get these all added and I'll start getting emails out to you all this afternoon. And what was the Cleveland Heights one called? Somebody just asked about what the Cleveland Heights one was called. So the Community Promise is our program that is eligible for those moving out of part of Cleveland Heights. I have to see if Cleveland Heights still has a community program. It's probably on their webpage. I'd have to look it up. There used to be one for Shaker called the Heights Funds for the Future. So if anybody on here knows, feel free to speak up. Otherwise, it might be a little bit of trial and error going back through to see what's out there. And
Yeah, and just go to the local community's webpage and see if they have programs available.
Yeah, and these housing departments, most of us hear housing department, we think of the evil home inspectors from Shaker and Cleveland Heights and University Heights, but there's the housing, they're also tasked with building home ownership in the community in the area. So they are good good resources, and frankly can be good partners and good referral partners to some extent. So keep it all in mind. So we kind of timed this one up with the spring market. In March we start thinking about, if not 2 months ago, is the change in weather and the change in the market and who's getting out to purchase and hopefully list as well. So feel free, if you're looking for a reason to touch your sphere, feel free to use these flyers if they're first-time home buyers. And if they're not first-time home buyers, believe me, we've got other resources as far as, hey, bridge loans and recasting a loan, and what are some other, there's plenty of talking points. So if you're saying, hey, I'm calling 30 people in my sphere today, what's a good topic? Tell me something about interest rates, or tell me something about selling while buying, or buying while selling, or something like that. We're all ears. So all right, cool. All right, I think I got 6 or 8, maybe more emails, so I'll start sending out some flyers this afternoon. Or
Don, I can just give you everyone's email on the call too, so you
All
don't
right.
have to write everything down.
All right. Well, thanks everyone. Thanks for joining us, and enjoy whatever weather is to come, and then the spring once it gets here. I think we're about a month away from the home opener, so that's how I measure my my business. Cool. Thanks everybody.